This is why you should work with a local lender. I have a horror story. I got a call last week from a real estate agent that I know who had a buyer whose loan was falling apart. Why was it falling apart? Because the lender that they were working with, which was some bank I'd never heard of, had pre-approved them for a loan to go under contract on a house that was a 2-unit property. They said that they were getting a conventional loan, and the lender told this first-time buyer that they could buy the house with anywhere between a 3 and 5% down payment. There's one problem. There are no conventional loan programs that allow you to put a 3% down payment on a 2-unit property. So, surprise, surprise, they couldn't do the loan. They actually came back and told the buyer that they needed to put a 10% down payment, of which they didn't have half of that money in the bank. So, their deal was falling apart. My friend, who was their real estate agent, was about to lose out on their commission and had just worked for free for the last 3 weeks. And the client was distressed because they were going to lose the money that they put up for their appraisal fee and their home inspection. When I talked to them on the phone, we come to find out that they could actually qualify for a 5% down Freddie Mac Home Possible, but they still didn't have all of the money in the bank. So I had to coach them on getting the money in the bank from their paychecks and getting a gift from their family, and let the seller's agent know that they needed to switch lenders because the previous lender had completely dropped the ball. Unfortunately, I wasn't able to work with this client because the seller's agent was giving them some resistance about switching lenders after the appraisal was back, and they ended up losing out on the house. The reality is, if you're working with a lender that you have never worked with before, as a real estate agent, you want to represent your client, but also protect your commission by calling the lender up and interviewing them vigorously about what type of loan they pre-approved your client for, whether or not they've actually run automated underwriting, verified their assets and their income, because if they start the loan process and they can't actually make it to the settlement, you don't get paid, your client doesn't get their house, and everybody's upset. It's going to affect your reputation in the marketplace if you're working with buyers who don't have solid pre-approvals, and when listing agents see your offers, they're going to ignore them, and you're not going to make any money. In fact, you lose money because you're working with clients who can't actually get approved for loans. So you always want to make sure you have relationships with local lenders that you can trust who have a good reputation in the marketplace. When listing agents see your offers, they're going to take them seriously. They'll hopefully call the lender up to verify the pre-approval, and your client has a reasonable shot at getting the house in a competitive seller's market like the one we're in right now.